Okay, so to continue on here, why I'm looking to sell is because my percentage is so high. Why I'm holding is because when I bought this at 30 back in June of last year, I really thought we were going to 40, $50, maybe $60 a share. However, that didn't work out. So I'm not always right when I make my calls. Right here, I made these buys and it went down significantly from these three buys. In some regards, we were lucky to just get our money back. But this is why I always have money piled up in cash, because if there's an opportunity to buy more, I want to buy more. And I couldn't make these buys here if I didn't know I had more cash in reserve to buy my way out of this. So again, when I'm investing in something, I'm investing because I think 3 to 5 years from now, I'll double my money. And if I double my money in 3 months, well, then I got to reassess, if I really want to keep investing in that or not. Typically, what I'll do is I'll sell some of the shares. So likely this 26, I'll sell this. We actually already have a sell marked at 40.01, which I just changed to 41.1. And let's take a look at the chart and see why. So here's the chart. I keep these hyperlinks here. I invest in both of this jug and the nugget. It's Direxion funds. And when I click on this one, the reason why I invest in this is when I see if I got a chart up here. If I see gold going up, that's why I don't like Chrome. When I go to Chrome, I don't get that chart up there. It's not showing up here. But when I see Chrome or gold going up and it jumped 6%, this fund here jumped. It pretty much doubles whatever gold does. So again, gold went up 1.76%. I more than doubled at 6.6%, and then after hours, it still went up another 3%. So we're up to almost $40 a share right now. So if I take a look at this chart, over the last 3 months, you see how low it got? Like 22, right about here, its low was 21.98. So we missed the buy at 22. Well, I think what happened was I had it at 22. It only went down to 21.98. Just because the price went down to 21.98 doesn't mean you'll get your buy at 21.90 or 22. Even though when under 22, sometimes it happens so fast that when it turns back around, the broker wasn't able to execute that trade. So I did have a bookmark for me to buy at 22, and it didn't execute, even though it went under 22. It was just too brief a time. So if I scroll down here, you look at this chart, and we're on highs of 3 months, 6 months even. If I hit my 6 month chart, we are new 6 month highs. If I hit year to date, we're definitely on a high for year to date. And look at back last year. See, last year it was over around 50. That's why in June I was buying around 30, thinking it would come back up, but you never know. And see how it pretty much didn't do anything. Actually, it was kind of falling all the way through here. Now, October, I always say buy in October. Look what happened in October to gold, but it shot right back down for this last few quarters, and that's why I bought more in here. So we bought more in here. I'm hoping to get back up here in the 50 to 60 range. So if I scroll down even more, you can see this thing was at one time at $165 a share. Now, granted, I got dividends, so that kind of reduces how high that would go. But bottom line is it's way off its highs, even with the dividends being accounted for. So if I could get up here around 60, I'd feel really good about this purchase at 20. I think what might happen is it's going to bounce at 40 and then maybe come back down and then look for another buy here and then watch it go back up. As they're saying that gold's going to continue to go up for the next months to come. All right. So when you look at this, if you look at the holdings, basically it's just following this index. So when I click on this ETF and I look at its holdings, these are the companies it's holding. You probably don't even know the names of these, but when I click on this, you can see how if all of these are up, most likely my stock is going to be up too. So when I go back a step here, this fund did 3.43, and holding the Junior Gold Minerals Fund, JNUG, is investing into this fund as an option that doubles whatever this is doing. So 343 is what you got here, 666 is what I got for a percentage on the JNUG because it's doubling. Be careful because it doubles the opposite way as well. All right, now if I do a comparison here, if I check this out and I go to copy and paste that in there and click on that index, you can see it depends on when you're looking at this. Just the last few weeks, yeah, the JNUG has very much been outperforming it because gold has been on and up. But when gold goes on a down, you see that the JNUG goes much further down. But the reason why I like to buy this is if you believe it's going to actually go back up. If I'm buying on these lows, I'm not going to get as high a return, even though I did get good positive returns. But if I'm buying on these lows, look how much further my gains are from bottom to top. And that is why I really go into these Direxion ETFs, your ability to double and triple whatever is going on. Many brokers will tell you this is very high risk investments. I'm not telling anybody to buy. I'm just sharing with you guys how I've been doing it, what I've been doing for buys and sells. Again, as I expand these charts, you can see in the long term, buying the JNUG long term is way underperformed this other ETF that it follows. That's why I'm more inclined to trade, because if I'm not trading, I just don't think I'm going to be as profitable. If you go back to July here and we just buy and don't trade, you're at the exact same price. So buying in on dips and then taking some profits out has helped me gain more in my portfolio. So again, this started with me helping this particular person with his first time investments, and these numbers are unreal. That is not a percentage you should expect that you're going to get in a 2-month return. He asked me, how come this one doesn't do anything? We've had this for a whole month and he's not seeing any gains. We got only 0.6% gain, because that's real life. That's how real investing works. You don't get 70% in 2 months. That's just not how it goes. This is another investment I'll talk about later. This is into lithium. If you believe in the batteries, if you believe that they're going to be selling batteries, if you like lithium batteries, maybe this is an appropriate investment for you. But this gold fund here, I just had him invest. I thought this was going to be a good time, but those investments turned out to be not a good time as the market tanked and went down to 26, 25, and 22 and less. So we got in at these lower prices. When it got back up to 30s, it enabled me to sell these off. So I'm holding at a lower price. And that's how I do most of my investing. I try and make sure I have money sitting aside so I can continue to buy if I really believe in this ETF. And almost always works for me.